Digest for us what Steve has just talked about, particularly those inflation numbers that do feel a little hotter than expected, and what that might imply for what the Fed will do.
Well, it's complicating their decision making. I mean, Powell, based on his testimony just last week, seems to want to cut, but he wants to do it slowly and carefully, as he said. I think if you focus on the employment side, they see the unemployment rate about at a 2-year high. But on the other hand, inflation that's remaining sticky. I think the one flaw in Powell's thinking is he said we don't need to wait until inflation gets back to 2 to start cutting. But if there's a lesson to be learned from the 70s, is getting inflation down into the 2 range is one thing, keeping it there is another. So just imagine they start cutting before they get to 2, and then inflation heads right back up again. Then he's stuck. And the Fed has trained us to think that they only go one way. They're either cutting or they're hiking, and there's no dynamism in between. And I think that's one of the things that they're really going to struggle with. And it's a real bind for them, I believe.
Steve, react there.
Well, I mean, one thing is Peter and I share a lot of things, affinity for the 70s, especially some of the music and some of the Grateful Dead shows we might have gone to. I don't get quite the lesson from the 70s that people have glommed onto that historical period. I kind of think that what happened in the 70s is not very akin to what's happening right now. I also think there are some interesting things happening now that might make things very different. For example, the productivity story. I do think the Fed has a little room to cut. And what is interesting about what Peter said is this idea of it being binary, cutting or not. Jefferson, the vice chair, did come forward with an idea that maybe there's a tweaking modality to the Fed, which is we do a couple and then we hang out for maybe a long time. And he brought forward, Peter, that 1995 analog, which might be more along the line. And I bring that up because Jefferson brought it up because at the same time there was also a productivity surge around then.
Jefferson, Hamilton, Washington. Peter, what do you think about that idea that maybe the Fed cuts and then just holds there to wait and see what inflation does?
I think Steve's right, and I do think that's what they end up doing. And I think Powell will want to cut or tweak, call it, as far away from the election as possible. And that's why I think June is very much in play. But the interesting thing here is that we have inflation expectations 2 years, 5 years out that are at 1-year highs, commodity prices that are bubbling again. The disinflation on the good side may be ending, but on the flip side, services inflation should continue to moderate as slower rental growth shows up in the data. But again, I do think that Steve's right. I do think they're going to tweak and really take a pause. Putting that aside, though, I really want to hear what they have to say about the balance sheet, because I think QT does begin to really matter in terms of its impact on liquidity and asset prices as their reverse repo facility gets closer to the $100 to $200 billion range.